Thanks for joining us at EMII.com. I'm Caitlin Sisney with your hedge fund headlines. Today is Thursday, March 27th, 2008. Merrill Lynch means business as it moves to claim a bigger share of the hedge fund prime brokerage market. Number 3 in assets and revenue behind Goldman Sachs and Morgan Stanley, Merrill has increased its hedge fund clientele by 50% in the past year, according to Bloomberg News, and is likely to pick up a nice number of defectors from rival Bear Stearns. According to Merrill Lynch Managing Director Jeff Penny in a BN interview, his firm received 20 telephone calls from nearly 24 hedge funds within days of the Bear Stearns collapse. Staying with hedge fund news, now that the Blackstone Group has gone public, will shareholders make the buyout giant more accountable for its compensation-setting decisions? Probably not, since they lack the clout to do so. Traditionally, Blackstone has not had a compensation committee, and more or less head honchos Stephen Schwarzman and Peter Peterson set the rates, according to the Wall Street Journal. Even with that power, however, it appears the compensation paid executives is pretty much in line with its competitors. The Journal reports that Blackstone's compensation ratio is only slightly higher than Goldman Sachs' ratio of 44%. Besides, with Blackstone in control of 75% of the company, there would be little investors could do about it. And in other hedge fund news, the decision by 3i Group to move out of early stage startup investment, reported in Hedge Fund Daily a month ago and by Financial Times this week, signals a sad state of affairs for the European venture capital sector. FT notes the 3i, Apex Partners, and other of the continent's largest venture capital investors have good reason for shifting their efforts to later stage investments. Citing figures from the European Private Equity and Venture Capital Association, early-stage European VC investments averaged negative 0.1% a year since the group started keeping records. In contrast, later-stage venture capital investments produce returns on average of 7.8%. And in hedge fund news in Asia, considering Asia-Pacific accounts for about 1/4 of the world's gross domestic product, but only 10% of the global private equity volume, the region appears to offer a lot of potential for the industry. That's the assessment of CEO of Colony Capital in Asia, Grant Kelly. Kelly made his comments at a conference in Singapore, according to Private Equity Online, in which he noted the size of the private equity deals are getting bigger and more frequent. Moreover, PE capital raised for investment in the Asia-Pacific region was twice as much in 2006 and 2007 as the 4 preceding years. Kelly noted that China, Japan, Australia, and New Zealand are still the biggest regional markets, but that India claims the largest number of deals. And that rounds out today's hedge fund headlines. Thanks for joining us on EMII.com. For more details on these stories and much more, click on our hedge funds channel online and read the latest developments.